The 5K SnipeAthon is a public trading journey where I'm going to grow $5,000 of my own money to $10,000 trading currency in the foreign exchange market. This is a completely public and transparent trading journey where I give daily and weekly updates of the progress. If you want to follow and stay up to date on this trading journey, make sure you hit like, subscribe, turn the notifications on, and look in the comments to join the Snipers Anonymous broadcast where I update the chat daily on the progress of the account. Peace and blessings, Akeem and Akayot. Welcome to week 12 of the SnipeAthon. I really appreciate everybody that's on the call, on the live right now. You guys go ahead, drop your favorite emoji in the chat. Let me know where you watching from, where you viewing from. But without further ado, let's go ahead and get into the weekly update. So last week we had a starting balance of $4,925.69, and we had an ending balance of $4,953.10. So headed in the right direction again. Last week we took a total of 8 trades, and out of those 8 trades, we had 5 wins, 3 losses. So we had a win rate of 62%. There are no open trades running, so there's no open profit or loss. The net loss so far is $46.90, and the net loss percentage is 0.993%. All right, so the notes that I have for this week are quantity over quantity. As you guys can see or have been seeing, those of you who have been tuning in, I've been taking a decent amount of trades a week. It's always in between, 5 to 8 trades. And what I want to do is decrease the number of trades that I'm taking. And I really want to start waiting for quality setups, right? And so that's why I said quality over quantity or quantity. Yes, quality over quantity. And this week's focus is going to be wait for the confirmation. So that's in tandem with that quality over quantity, type of mindset. So we're going to be waiting for confirmations. And I'm going to give you an example of what waiting for a confirmation would even look like. And when we talk about swing highs tonight, swing highs and swing lows. So tonight's theme is swing highs and swing lows. I'm going to be doing a little bit of education on swing highs, swing lows, how I use them to determine directional bias, and then how I also use them for confirmation for directional bias. Hey, Joe, welcome to the call, man. Welcome to the call. All right. So let's go ahead without further ado. Let's get into news like we always do. We want to get a forecast for the upcoming week. Give me a quick second to share my screen. Okay, here we go. All right. Put me down here in the corner. All right, so Monday, what's passed? We had some red folder news for the euro unemployment rates, and then we had an ECB speech. Didn't really see much movement from that. Anybody that's trading the Australian dollar, interest rate decision news releases are always something to look out for. And so tomorrow actually not tonight, but tonight and tomorrow, or at 1:30 in the morning or 12:30, there's going to be an interest rate decision for the Australian dollar. At 3 o'clock in the morning, we have unemployment change, and then for the euro, and then at 10 a.m. we have a lot of red folder news releases, pretty much around home sales. So that's going to be around the New York Open. So if there's anything happening, any moves, just be aware that that's going to provide volatility, to the market. And then after that, on Wednesday, we have retail sales for the euro at 4 o'clock in the morning. For the United States dollar at 8:15 in the morning, we have employment change. And then for Australia, we have the balance of trade. On Thursday, we have another speech from ECB, which is going to be at 3:15 in the morning. Then after that, at 5 o'clock, we got retail sales. And then for the United States dollar at 8:30, we got jobless claims. And then on Friday, euro, we have balance of trade at 2 in the morning. At 3, we have another speech from the European Central Bank. And then we have non-farm payroll. All right, so this is important. I'm glad that I look at the news because I actually forgot that it was the first week of a new month, which means on Friday is going to be non-farm payroll. Usually, non-farm payroll week, it can be unpredictable. Sometimes we get volatility in the middle of the week. It's kind of unpredictable of when that volatility is going to come. I've seen spikes, just like random spikes happen, in the middle of the week on a random day. But just be aware that this is, I call it non-farm payroll week. So I'm gonna be moving with a little bit more caution this week because of that. And then on Friday, I don't trade on Fridays unless I already have something running. But Thursday going into Friday, I'll be cautious of that. All right. So let's get into looking at the DXY. So what's going on? Let's do a review of the DXY. We're looking at it from the daily right now. It's been following this channel since January. We created a box of consolidation up here, broke out of the consolidation. And when we broke out of the consolidation, we left a gap. And that gap, right, we broke out, came down, filled another market open gap. Once that market open gap was filled, we rejected. And then we went to fill that imbalance, but it didn't get filled all the way. All right. So this is how much imbalance is left to fill up there. Price fell, it dropped, came back down into the market open gap there, and then we took off. So what it's looking like is we protected this low here, and technically this is consolidation, right? We created a high, we created a low, created a high, created another low, and now we're headed back up towards this imbalance, which I'm assuming my first target would be these highs here, right? That would be my first target. And then the second target is going to be the filling of the remainder of this imbalance here. So as far as this week goes, I'm expecting NFP and the volatility this week to go ahead and push the dollar back up to this imbalance. So I have a bullish bias on the dollar, although it is in consolidation from the higher time frame. That I'm going to be looking for sales on the euro. All right. So now let's go ahead and look at the euro. Make sure you guys can see this. Oh, Joe, yeah, I'm feeling a lot better, man. I'm feeling a lot better. I'm still in a fight, but I'm definitely feeling a lot better. Thank you for that. All right. So let me take these off the screen. Okay, so let's I want to talk about swing highs and swing lows really quick. This is going to be a simple breakdown. So what is a swing high and what is a swing low? This is something that now you can look at swing highs and swing lows on lower time frames, but I only use it on the higher time frame or on the daily to determine directional bias. So what a swing high is it's really a candle pattern, right? And it's a sequence of 3 candles. And so the rule of a swing high or a swing low is that there be a high in the middle and then a lower high on either side. And that validates as a swing. Okay, so for example, we'll start with this with the swing low here. This would be considered a swing low. All right, you see how we have a candle here? Let me change this. I forgot how to get that crosshair off of there. But you see how we have a swing, we have a low here, and then we have a candle. Even though it's a little bit higher, it still counts as a higher low. And then we have a higher low here. So this would be considered a swing low. All right, and then from a swing low, look for a swing high, which would be here. This candle in the middle. Hold on, y'all. Let me get this crosshair off of here. Okay, there we go. All right, so here we have the high, and then on the right side we have a low, and then on the left side we have a low, and so this will be considered a swing high. Same thing down here. We have a swing low. We have the low. We have the lower high, or the higher low, and the higher low on this side. So this would be a swing low. Now, what I'm looking for, and why swing lows and swing highs are important, is because price throughout the week, it tends to hunt previous days lows and highs. You can see this throughout, all of the market. Like, this is just the way that it moves. Even as it's uptrending and downtrending, is usually targeting previous days highs and lows, and so we can set these areas as targets. And so I'm going to show you an example. Here we have Thursday's low, so a low from last Thursday. Sunday's low, which is yesterday. This is yesterday's low right here. Then I have the bottom of the Asian range marked. And then we have Sunday's high. So Sunday's high started up here and it finished down here, created a low. And then last Thursday, we created a low. So this Thursday's low. Look at this swing. Right, now that we've learned how to identify swing highs and swing lows, or maybe you've already known about it, but we have a high, we have the lows on either side. This is a swing high, right? The swing high hasn't been broken. We came down and we created a swing low, right? So high on either side with the low in the middle. And then this swing low, what we want to look for is this swing low to be violated, or broken through, and that happened, right? We had the low poke through, and then we created another swing high. So we have a high, lows on either side. This high hasn't come above this high, and it also rejected very aggressively. Like, this was a strong rejection. This looks more like a sweep of liquidity, and it looks like they want to continue down. Since we came down with so much momentum and price is hanging out around this area, I am now targeting Thursday's low. But here's the thing. We got 1, 2, 3 daily candles that created the swing high. I cannot take a trade until this fourth candle that formed, or any candle that forms after this candle has to go through this low. I have to see this candle go through this low. I have to see the candle go through Sunday's low. If it doesn't, then I'll wait for the next candle to form and wait to see if that goes through Sunday's low. But if I do not get a violation, or a push through Sunday's low, I will not take a sell, because technically it's still, even though it is downtrending and it's a lot of momentum going down, that is the confirmation that I'm looking for. That's the high probable trade setup. And if it doesn't go below this low, then we could end up coming all the way back up, to this high here. And so how do we see that on the lower time frames? How do we even see, what day it is, or how do you determine the days, the high of the day and the low of the day. Well, if you go into your settings and you go to events, you hit session breaks. And what that's going to do, should do, is drop lines on your screen. And so this delineates, the different days of the week. So technically we've gone into a new trading day. So this is Tuesday right here. This was Monday's trading day, or I'm sorry, this was Sunday's trading day. So we got Sunday's low and Sunday's high. And then over the weekend, we had Friday. This is what happened Friday. And then we have Thursday, which is where I got Thursday's low from. Now, if you see these lows and these highs are sensitive areas. If this was Thursday's or this was Friday's low, look what happened on Sunday. When the market came down, for one, it opened up, it came back down, and then it came back up and retraced, and look where it sold off from. Friday's low, right? So that was a sensitive area, and it sold off from there. I just wanted to point that out, that these levels, sorry about that, these levels are also sensitive, to price action. So what we're waiting on now, based on that, and I want to check with everybody, if everybody is following me, if everybody understands everything that I just went over, go ahead and drop a thumbs up or something in the chat to let me know y'all with me. I just want to make sure that y'all there. So if we get a violation of Sunday's low, where I'm going to be looking to enter for a trade is the bottom of the Asian range. All right, so right now we're in the Asian, we're forming the Asian range of today, of Monday. This is going to be this is the Asian range of Sunday. All right, so the market opened, they formed the Asian range, and I'm aiming to enter for a sale at the bottom of that Asian range. All right, and it looks like we're starting to get a push, below Sunday's low. So I'm expecting, price to push down for the rest of the night, rest of the day, tomorrow, and then going into the new trading day, I would like to see a pullback. So Tuesday is going to be a day that I'm watching. And then Wednesday should be the day that I take the trade if price comes back, up in this area. So I'll be looking for a retracement back up into the bottom of the Asian range of Sunday. All right, which would be, if we draw from the high, let's just say we extend down to this low here. That would be about the 618 retracement. 50% would be the New York range. But that's it. It's that simple. That's what I'm looking for. I'm looking for a push down below Sunday's low, which is starting to happen now. And then on the next trading day, I'll be looking for a retracement back up into the bottom of the Asian range. Looking at this on the daily. Yep, that looks like a lot of momentum. I mean, this is a strong bearish candle, close, open, and now we're pushing below yesterday's low. So I definitely think we're going to tap Thursday's low sometime this week. Hopefully it's not tonight, but even if it is, that's okay too, because I'll be waiting on a pullback and even, a deeper pullback and a nice move. Now, as far as where I'm looking to target, once or if we pull back and we get in at the bottom of the Asian range or even lower than that, the first target is going to be Sunday's low. So I'll be looking for a price to come back to Sunday's low. That'll be the first take profit. Second take profit will be Thursday's low. And then the third take profit will be the Hail Mary. And I'll be looking for a price to fill in this this imbalance here. Right. See, we had that wick there, and we had that wick there, and then we had price kind of fill in, and it never came back down and revisited this zone. So I believe that that's going to be a magnet for a price to come back down to. And so the third take profit would be down here. And let me highlight that imbalance. All right. Check the comments. Okay. So Khalil asks, so you watch the trends for at least a day or two before even placing the trades. Yeah, that's a practice that I'm getting back into. As of late, I kind of just been going day by day. But in the beginning of the call, I was saying this week the focus is quality over quantity. And so I'm gonna be waiting for these confirmations. And so yes, I'm looking to trade less. I'm looking to take less trades per week. And so I am going to be waiting on confirmations to happen. I'm gonna be waiting for my levels to come, for price to come back to my levels to get hit. And yeah, yep, that's really how the strategy works. It's about Sunday is like the setup. You watch the market set up. Monday, you also can watch the market set up, and then the majority of the moves happen. I'm not saying this happens every week, but just based off of statistics, Tuesday through Thursday is when most of the moves happen. Tuesday through Thursday. Sundays and Mondays is usually when the market is setting up, and then Tuesday through Thursday is when the majority of the moves happen. So yes, we'll be watching the charts for a couple of days and waiting for a price to show me what it wants or what I want to see, and then I'll take my my trades. And most of the time, those entries happen at a certain time of the day. It usually happens during what I call the kill zones. Let me bring these back up. So this goes into time and price theory. A lot of times moves happen during the London and the New York session. So if the market is downtrending, you'll usually see the Asian range set up, and that sets up liquidity. You'll see a run on liquidity, and then you'll see the move happen in the next session, which is the London when it opens. And then if it is truly downtrending, the first move is in the London, and then the second move you can catch in the New York. Perfect example is on the screen right now. So this was Sunday. This was the Asian range. During the London, you had price run up. It didn't go above, right? It didn't go above the high, so they didn't do a sweep, but they did, respect this high. And then price fell below the Asian range and continued to fall. Now, leading up to the New York pullback, going into the New York, because also look at the times. Let me get the crosshair back on here. So at the bottom of my screen, that's going to show the time. The Asian range, right, starts at 8 and it ends at 1. So that's when that forms. The London, even though the official open is at 3 in the morning, the move usually starts to take place. You want to start looking for it around 2, 3 o'clock. So at 2 a.m. in the morning is when the move, that's when the entry usually takes place. going into the New York, which starts at 8:30, as you can see. I'm usually watching for the New York in between 6:30. If I'm going to trade the New York, I'm looking to see what's happening starting at 6:30. So see, we had a pullback, but they had a second pullback that went above this high to knock anybody out who, thought that this was the move. And in the New York, they did the pullback and then boom, the second move. So first move during the London, second move during the New York, and then the market goes back into consolidation, forming the Asian range. And this is a cycle that you see over and over and over again. Now, like I said, it doesn't happen every single day, but with time and price theory, when the market is trending, this is usually how it happens. So, all right, now let's look at GU really quick. So we're gonna do the same thing with GU. Look at the swing highs and the swing lows. It respected the buy zones and the sell zones that we set up. I don't know if anybody pays attention to GU, and we're following the markups, but those zones hit perfectly. Turn this off. All right, so we came up to a sell zone. We are within a bigger channel, as y'all can see, following that channel, and we coming from the bottom of that channel now, and this was a rejection. So this very well could be bullish, but because of my bullish bias on the dollar, I'm expecting GU to continue dropping as well. But remember, swing highs and swing lows. So we have a swing high here. Have we had any swing lows broken? Here's the swing low. So we have the high on this side, low in the middle, high on the right side. And that low was not violated. There hasn't been any swing lows violated. No, you could not even this. Yeah. So no swing lows have been violated on GU. And so based on rules and confirmation, there's nothing for me to do here. Right now, of course, easily I could take a sell or say, say it looks like, it's going to sell. You can still take a sell based on other things for the simple fact it's coming from a sell zone or, whatever it is. It doesn't, I'm not saying that if it doesn't break the swing low that you can't sell. What I'm saying is for this particular strategy, if you're going to use this strategy using swing highs and swing lows, you want to see a swing low get violated and then a swing high be formed before you take a trade, and then you want that next candle, that fourth candle that forms, or fifth or sixth, to violate the previous day's low, which would be this candle here. So, but off of that strategy, like just getting off of that strategy is looking at market structure. It's very possible that GU is going to continue down as well, but just keep in mind that we do have a IC here. All right, so that's more than likely going to be a rejection zone. But if we come below this rejection zone and GU starts hanging out around these lows with this type of momentum, more than likely it's going to push down, and we also have imbalance here that needs to be filled along with equal lows. So anybody trading GU, that's what I see. If price gets below this buy zone right here, and it's hanging out here, I would expect it to continue below these lows, attack these equal lows, and start to fill in at least half of this imbalance here. Maybe we're headed back to the bottom of that bigger time, that higher time frame channel. All right, let's take a look at gold. What's going on with gold? So we created another channel, broke out of that channel again. We created some consolidation here. You'll see this on the lower time frame when I drop down, but this is a buy zone. This is actually a very big buy zone. I was telling one of my students who trades gold, if price comes down into the buy zone, you want to wait for a rejection. You know, before you take any trades, you want to actually see structure start to form, some higher lows, some higher highs and higher lows form coming out of that zone before you start to look for buys. But it looks like it is currently headed down for that buy zone, starting to break out of this consolidation. I called this low getting taken out yesterday, which has happened. We're coming from a sell zone, the top of higher time frame consolidation, and so just wouldn't be surprised if we come back up to this is, let me see, this is Monday, Sunday, Friday. We got Friday's low here. So I wouldn't be surprised if we come back up to Friday's low, that level, and reject from there. So this is what I'm calling for gold because of the momentum that I'm seeing. And that's the zone that I see. I see gold selling from the middle of this consolidated area, and I see it reacting off of Friday's low. Target coming down into the buy area, or bottom of the consolidation. Now let's go ahead and look at US 30. Okay, so did get a reaction from that buy zone, but we've broken below the buy zone, which means this is now a mitigation zone. And so I would expect price to sell from this area. And if we're looking at highs and lows, Monday, Thursday's low is here. The question is US 30 ready to start downtrending? Well, we created a swing high, and we also violated a swing low. Swing low was violated here. We ran up, violated a swing high. This is a lot of momentum. This is a lot of momentum going up, but a lot of momentum also coming back down. And so I'm looking at this low to be targeted this week. Yep. Did a sweep of these highs here. And I'm expecting US 30 to open up bearish tomorrow for the New York Open and during the London tonight, because US 30 also moves during the London, but more so during the New York. Yeah, we create some nice consolidation for a sweep up to clear liquidity and continue filling this imbalance and possibly going for this low here. You guys got anything you want me to look at? Any pairs I haven't went over that you want me to take a look at? Go ahead and drop it in the chat, and we'll go check it out. Got XRP. See what cryptocurrency is doing. A lot of consolidation. This is the weekly. So we've been consolidating in this price range for 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks now. So a big move is definitely about to happen. Anytime you see consolidation like this, especially tight, little tight consolidation, a big move is about to happen. They're building up a lot of liquidity, a lot of people buying and selling in here. Something is about to happen in the crypto market. It's either going to be bearish or bullish, depending on what they decide on. All right, let's look at Bitcoin. Okay, we've broken out of the consolidation. Just looking at the weekly, the next stop I see, or next, big level of resistance is going to be here. Which is around 90,000, in between 90 and 95,000. And we got a major low right here, but if we push through that, I see them pushing up to 90,000. It's at 80,000 now, and the way that the way this looks, the way that is gearing up, this is about to continue at least up to this zone right here. Got imbalance to fill. Of course, we have bullish momentum. We cleared out a major low here, respected this low. We haven't dipped below this price. The lowest it came was 60,000, and now we pushing upwards towards 90,000. So I am bullish on Bitcoin. Let's drop down some lower time frame, see some more structure. Okay, now let's move this down here. All right, now we back to down to 85,000. All right, so I'm moving where I'm expecting major resistance back down to 85,000. So we at 80,000. Yeah. Daily highs are getting cleared. Swing lows are getting created. Swing lows are being respected, not being broken. But swing highs are being broken, right? Swing high. Let's start here. Swing high, push through. Swing high, push through. So now we would wait on a swing low to be formed, which, see, yeah, you will want to see a pullback happen and then a swing low happen. You want to see a pullback, swing low form. You want to see this swing low get protected. You won't want to see that get pushed through. And once that swing low forms, just apply that strategy that we went over in the beginning of the call. But yeah, I see Bitcoin going up to 86,000. That's my next call. That's the next stop. We at 80,000 now. I'm expecting 86,000. At the most 90,000 before we get a nice pullback or rejection. All right. Drop some emojis. Drop some emojis in the chat if you got value from this call tonight. If everything made sense. I hope you got value. If not, feel free to ask questions in the chat. I'm more than willing to go deeper into that strategy as far as the swing highs, the swing lows, and how to actually apply it. But that wraps it up for tonight's show. Thank y'all for tuning in. Like I said, hope y'all got value. As always, becoming a master trader isn't about mastering the markets as much as it is about mastering yourself. And remember, faith over everything. Discipline before profits, but faith over everything. Peace, y'all.